Hi, Gabe Cutland here. You came to one of my CE classes, the Credit Score World, and I just want to thank you for taking the time for watching this video. Since I've been systematically sending you guys some educational tips on credit and really how to influence people's overall credit profile in a positive way. One of the things that we talked about was the aspects that make up people's credit scores, right? And the one that we talked about particularly was 30% of your score is how in debt you're in, right? The more maxed out your credit cards are, the lower your credit score is going to be. But if you start paying down your balances, your credit score is going to start going up, going up, going up. Remember, we spoke about the credit score. It's not there to show you how awesome you are. It's there to show you how likely you're not going to pay somebody back. The likelihood that you're going to default, right? And 30% of your score is debt. How much debt you're in. And one of the concepts that we touched on very briefly is how to get out of debt using a whole life insurance policy, right? A lot of people just don't know that there's multiple banking components to life insurance. And one that we're going to talk about today is the PUA Rider. And I have Bill here, one of my partners with crushyourdebt.com. He's going to explain to you what the PUA Rider is and how we can use that to start paying debts down. Now, you as a realtor, you have to understand that you can also use whole life insurance to flip properties, right? Which is pretty cool. And that's another video that we're going to talk about and make a little bit later for you guys to see. But I want to bring you into this world of the different banking components that insurance provides and allows consumers to use to systematically pay debt down. If we can lower their debt, that means debt to income ratios are lowered, which means the loan officer that you're working with can issue a pre-qual letter, which means now you know exactly how much you can show a property for, or take your client around to show them, hey, they can afford only $250,000 or $300,000. Now I know what budget we have to work with. So the whole point here is let's lower debt to income ratios by eliminating debt so that you can go ahead and start showing your clients a home, okay? And then another thing, once your client gets into the home, we can show them how to eliminate that mortgage debt in the same exact fashion. So I'm going to let Bill kind of go over a little bit of the details of what a PUA Rider is and how we're using whole life insurance to help your clients out, lower their debt, get into homes, and then pay their mortgage off all at the same time.
We use a specially designed whole life insurance policy. It's a dividend paying life insurance policy with specially selected companies, mutual companies, so that the person, when they get the policy, they become an owner. They own that policy, and the dividends go directly to the clients, not to Wall Street. The PUA Rider stands for paid up additions. The reason most of you've never heard of it is because most life insurance salesmen don't either know what it is or they don't understand how it works. But a paid up addition is supercharges the life insurance contract. And basically what we set people up with is an overpaid life insurance. So they're paying a small amount of money for the death benefit, which will continue to grow. When they're young, the death benefit is low. And as they get older, when they get closer to death, the death benefit will grow when they're more likely to die. But in the meantime, what's important to them is, how am I going to pay this debt off? So we use that money, it goes into their policy, and it continues to compound. We never take that money out. So everyone has a wealth curve, and every time, right now, when you take money out to buy a car, it interrupts the compounding of that money. So you're essentially starting over again.
Right.
You buy a house and you take money out for the down payment, it's the same situation. So what we do is we show people how to essentially pay off their own debts with their own money.
Right, and what's interesting about this and what really made me gravitate towards this concept is the fact that it doesn't have a negative effect on your credit, right? And we all know that I like credit. I'm a credit strategist, and my job is to try to help my clients raise their credit scores as much as possible and overall create a healthy credit profile that will make lenders want to lend them money, right? And what I loved about this concept is the fact that it's not bankruptcy, it's not debt consolidation. I mean, why would you pay somebody else to pay your bills for you when you can just pay your bills yourself? And it's not settlement, right? Bankruptcy, consolidation, and settlement, they will all have some sort of negative effect on the overall credit profile. And this is something that I always try to avoid. And that's why I gravitated towards this concept, because it's using the client's own money to pay off their debts, to lower their debt to income ratio to a level that underwriting is okay with, right? And the underwriting says, okay, their DTI is under this percentage. Now we can go ahead and issue that pre-quote letter from the loan officer to the realtor so that you as a realtor can start showing a property, okay? It doesn't make any sense for you to show a property if you don't know how much the client can afford, right? But if we can get that answer to you, that just means now you have a client that can actually potentially move into a house that you can sell.
You know, the other thing is you must have a lot of people come to you, they're looking at houses and now they can't qualify.
Yeah.
And essentially those clients are gone. Well, if you can help them and send them to us and we can help them eliminate some of this debt, when they're ready to buy, they're going to come back to you and they're going to tell their friends who helped them.
Right. And that's what it's about. It's showing the client how they eliminate this debt, creating a great impression, and getting more referrals after that. You know, if you're that realtor that helped that client eliminate debt, they're going to be happy about it and they're going to go ahead and refer other people over to you.
And then the nice thing is we're going to use the same instrument to pay that mortgage that we just got them into, pay it off quicker, which might mean they're going to buy another house.
So what happens? So now we just got them out of debt and now we got them a mortgage. Now we just got them back into debt. So debt is debt. It doesn't discriminate. If it's yours, it's yours, right? So yes, we just got the client into the house, but now they're $250,000, $300,000 back in debt. Let's show them how to pay off that mortgage using the whole life insurance policy in 9 years or less, using their own money, not having to pay any more than they're already paying right now, right? So if you have any questions or you're interested in this concept of us being able to show people how to eliminate debt and pay off their mortgage using the whole life insurance policy, give us a call or click on the link to make an appointment to speak to either me or Bill. This is something that's going to help your client. This is something that's going to have a positive effect on their credit profile, because remember, 30% of your score is how in debt you're in. Let's eliminate that debt. Let's lower debt to income ratios, and let's get people into houses.
And what we're doing really is we're just showing them how they can create a pool of cash that they can access when they need it for any emergencies, whether in the home, their children, or whatever, while they're paying down their debt. Instead of what they're probably doing now, if they're doing it, is trying to pay it down by giving their money away to somebody else. They're going to control the money, and they're going to use it whenever they need it for what they need it for, while they're essentially still saving to pay off their mortgage in a third or less of the time that they normally would.
Right. So this is a way to accelerate their mortgage payoff and getting them into the house at the same time. So if you're interested, again, give us a call. My name is Gabe Cutlin with CrushYourDebts.com. You came to one of my classes, Liberty Credit Experts, the Credit School World, the CE class, where we gave you 2 hours of CE credit. And if you know anybody that has debt and their score is suffering because of it and they can't get into a house, give us a call. Let us help your client. Even though they don't have any collection accounts on their credit profile or anything bad, if they have maxed out credit cards, they may not be able to get into that house because their debt to income ratio is too high. So again, Gabe Cutlin with CrushYourDebts.com, Liberty Credit Experts, and we have Bill.
Bill Curtis, CrushYourDebts.com. Let us help your clients. Let us show them, how they can set up their own bank so they can improve their financial life.
Thanks so much, and stay tuned for our next video.